I am really surprised that Zero Hedge has not picked up on this story yet. In fact, I only saw one or two things, tiny blog articles where it came up on search and at Twitter. And the breaking news, and it's been for like the last 11 or 12 hours, and like I said, I'm surprised Zero Hedge did not pick this up, is that the People's Bank of China bailed out a Chinese bank. So Reuters published an article about this. Let me read the Reuters article. Chinese regulator to take over Baoshang Bank due to credit risks. This is from Beijing, the Reuters headquarters there. China's financial regulator said on Friday the country's banking and insurance regulator will take control of Inner Mongolia-based Baoshang Bank due to the serious credit risks it poses in a rare takeover of a domestic lender. The regulator's control of Baoshang will last for a year. Yeah, cough, cough, wink, wink. Wink, wink, cough, cough. Yeah, it's going to probably longer than a year. Starting on Friday, the People's Bank of China and China Banking and Insurance Regulatory Commission, CBIRC, said on their websites, China Construction Bank, CCB, will be entrusted to handle the business operations of the small lender based in the industrial city of Baotou. This statement said, Baoshang Bank came to prominence after its key stakeholder, Tomorrow Holdings, was targeted in a government crackdown on systemic risks posed by financial conglomerates, the rare takeover, the first in nearly 2 decades, at least publicly, because there's been rumors that this has happened and the Chinese have just had their state-owned enterprises or state-owned banks swallowed up other damaged banks. Sorry to interject, but okay, back to the article. Also highlights the long struggle of some smaller regional lenders in China, which suffer from deteriorating asset qualities, inadequate capital buffers, and poor internal controls and corporate governance. Also too much dollar-denominated debt and misallocations of capital. There is bad Keynesian economic central planning and bad MMT. There is concern this will add to the vulnerability of country's financial system amid the economic slowdown. Baoshang had a total of 156.5 billion yuan, which is only 22.68 billion of outstanding loans by the end of 2016, a 65% jump from the end of 2014, according to the bank's last filing on its assets and liabilities on its website. Do you think they're actually honest with that? Its non-performing loan ratio was at 1.68% as of December 2016. So do you really think, like American banks and European banks, that the Chinese bank on their own website is actually going to be honest about that? I mean, we went through the China hustle, right, where Chinese companies had one set of books on American exchanges and Canadian exchanges and a whole different set of honest accounting books for Chinese tax authorities, where assets were estimated at 10 times the amount. If you don't believe me, go see the documentary China Hustle, which I highly recommend. It has not published any annual report since then, citing its plan to seek strategic investors. Principals and interest on personal savings accounts in the bank will be fully guaranteed, so they've learned this from the Americans to prevent a full bank run. That they guarantee the depositor money and the business and the business operations of Baoshang Bank will not be affected by the takeover. CBIRC said in a separate statement on Friday. I should be taking a sip of my beer. In China's crackdown on systemic financial risks, the banking and insurance regulator took over Anbang Insurance Group in February 2018. Okay, so that's the end of the article. There is an interesting blog article that came out about this, and this was the only thing that came up, shockingly. I didn't even find the Reuters article that came up. It didn't come up in search. So this blog article linked to the Reuters article, and this guy provided some insights. Baoshang Bank is a commercial bank with around 10,000 employees, and this guy says they have over $61 billion of total assets. And he says this might be the first bank run and bank bailout by the PBOC after 1979, the Chinese economic reform. But he believes that there have been other bank, quote, failures in China, but instead of being publicly announced as a failure after a bank run, the shitty banks of the past were simply pulled into one of the state-owned banks instead of this being so public. And then he says it's not a huge bank by any means, but I find it interesting that they're being public with this instead of sweeping it under the rug. I wonder if this will be interpreted as a sign of weakness. And then this guy, I guess, I'm not aware that this Twitter handle is Jim Chanos, but he apparently thinks it's Jim Chanos who's posting on it. And it says, there's a bunch of comments under this about how, like, basically the Chinese are not copying the Americans, how they announced, like, a bank closure on a Friday, and by Monday they figured things out and it's back open for business. And saying that it's not that big a deal. So it's very interesting that we're actually hearing this announcement. In the past, I don't think we would have out of China. It's very interesting that they're announcing this publicly. Maybe they're trying to be a little bit more transparent, or maybe this is trying to send a message to someone, maybe a counterparty risk. This is not a big bank, but again, we don't know what derivatives they have. We don't know what stuff they have off balance sheet. We don't know what type of other bets they place. So just because they announced that they only have on their website, it only says about $22 billion worth of assets. And this other blog website, which I'll attach a link to, said it was only $61 billion worth of assets. In actuality, it could be leveraged up even more than that and not counted as assets. There could be derivative bets or other things we don't know about. So the new normal, bankers do what bankers do. Whether it's an American banker, European banker, Chinese banker, they're giving out bad loans. It's the new normal, right? The other thing I wanted to talk about is the dollar-yen ratio. So this other article I'll link you to, it says that a lot of people think that the Chinese are actually going to let, the PBOC and the Chinese government are going to let the $7 RMB to dollar level be breached. So it's getting close to that now, and they think that it's not as big a deal. So comment below if you think. But I've heard from some of my China contacts, and they told me not to use their names, that if the RMB to the dollar, if it starts to get to like 8-1, 9-1, bad things are going to happen in China. A lot of people will want out of the RMB. There will be a big rush out of the currency, big panic. To go into, more money will go into Bitcoin and other cryptocurrency. More money will try to leave the country any way it can. More money will go into gold and silver. Although with gold and silver at this point, I'm not sure that would raise the price much. Because we know that the central banks have been buying. We know there's been enormous Indian buying, especially in silver. And we know that there's been a lot of Chinese buying from the Shanghai Gold Exchange. Just massive amounts. So, this is a unprecedented move for the PBOC. There's the probability, is high that there has been other bank bailouts in the past in China. I spoke to someone on Twitter, I forgot the guy's name, he was a professional money manager, and he said he was covering Chinese debt problems when they were smaller decades ago, when they were just about to join the World Trade Organization, and that they had bad banks then, and he said they just rolled them up. So he said it wasn't massive amounts of debt, but he said they had a bunch of bad banks and bad debt, and he said they just rolled them into the state-owned enterprises, and their other banks just swallowed them up, and they just did bailouts, and they didn't even announce it publicly. So it's interesting that this would be announced publicly, that Reuters would do an article. This rumor was going around Twitter for hours, and finally Reuters has a story out on it. So comment in the live chat, or, well, the live chat's going to end in a minute or two when I end this short little video update, because remember, I said I'd bring you breaking news, and I did not see a Zero Hedge article on this, shockingly, that this could be the first of many bad banks going bad in China. Just because this is a small one, this could be like the canary in the coal mine, maybe. But remember, as long as these banks have RMB debt, bad debt in RMB, or other types of gambles in RMB, like derivatives bets or something like that, the People's Bank of China can just print RMB. The trouble for China is in dollar-denominated debt. That's where the big trouble is. Buying commodities in dollars, buying oil in dollars, buying food commodities like soybeans in dollars, buying gold in dollars if they have to, buying copper and these other base metals in dollars. That's where the problem is. Because China's once $4 trillion plus reserves are down a lot. Kyle Bass says they're below $2 trillion and running out very quickly to defend that dollar peg and defend the exchange rate level. So we'll see if you believe Kyle Bass. I think he's a smart guy. He's not always right, but he is betting against all these governments. He's bet against the Japanese government. I think he said he just closed out his China trade. So even though he may be right, he said he publicly disclosed he's closed out his short the RMB trade. So very interesting world we live in, that we actually got an announcement of a bank bailout, and there was a bank run, because I saw on Twitter that this lady who was retweeted, it was this Chinese of Chinese descent. I'm not sure if she was born in China, but she has friends back there, and she was reporting on her Twitter, she was into crypto, that there was a bank run before the bank closed. I don't see the Zero Hedge article. It should be on the main page. You'd think it would. You'd think it'd be up front. Okay, well, that's it for now.